Tim here, and today I wanted to show you a little bit about auto financing. There are a couple of different ways to pay for vehicles, and I think that there's a lot of misinformation or disinformation out there. So I thought I'd share with you exactly how you can purchase a vehicle, both on a lease purchase option and a traditional financing. And then let's find out which one is better. Okay. So one of the biggest reasons I like teaching people about financing of autos is so that they don't waste valuable money. See, if you don't know how to finance a vehicle, you're just throwing your money away. Just throwing it away. Better. Okay, so let's just get into it. We're going to start with talking about the way that you finance a vehicle normally. Normally what you would do is go into the dealership and put some kind of a down payment, or maybe nothing, depending on how your credit looks. But let's say for this, for this example, we're going to buy a Toyota Tundra for 60 grand. All right, so that Tundra is $60,000, and maybe we're just going to pay the fees up front, since everybody, listening to this might be from a different state. In Arizona, that fee would be like 9.1%. So there's going to be some things that we're going to have out of pocket up front in order to keep that amount at 60 grand. Let me show you kind of what that looks like whenever you're making payments, so that way you can kind of understand that. All right, let me show you. All right, so if you take that 60 grand and you finance it, I would recommend never going beyond 60 months. I feel like 72 or 84, if you have to stretch it out that long, maybe you should just look for a little bit cheaper of a vehicle so you don't end up being upside down, okay? So you get the 60,000 and then you're gonna finance it. And the way that your financing looks is something like this. Where, it's probably gonna be more like this. This will be your principal, right? This amount right there. And this would be your interest. This represents payment number 1, and this represents payment number 60. So as you make your payments, right, let me get rid of this. As you make your payments, right here, you're paying all your interest, you're front loading the interest right here. See that? Okay, so that's in a nutshell how the financing for a purchase works. So let's say that you decided you didn't want to purchase and finance the entire 60 grand because the payment's too much or whatever. There's a ton of reasons why you might do it another way. Let's look at the lease purchase. Okay, so I want you to think of a lease purchase like this. We're still going into the dealership to buy the car. I'm only going to negotiate on the sale price of the car. How I pay for it, I'll let them know whenever I get into finance. But I'm going to negotiate the price of the car. So like I said, we've negotiated a price of 60 grand. Okay, here I walk into the dealership, and this is what 60 grand looks like. I've got piles of $10,000 each. So in a lease purchase, the way it could work is I could walk into the dealership, I can buy the vehicle for 30 grand right now. The other 30 grand is called a residual, which means I can pay for this in 3 years and I can keep this cash, right? I can keep this cash in my bank or working in my investments while I'm driving the vehicle. All right. So with my Nissan Maxima, it was actually a 2008 model, I want to say. Either way, I think the sticker price on it was somewhere around $40,000. And I probably paid close to that or whatever. But the residual on it was $22,000. Well, something horrible happened. One day I got into an accident in that vehicle. I was driving down the road and somebody rear-ended me pretty hard. Well, they didn't total out the vehicle, which I wish they would have, Because at the end, that vehicle was worth maybe 10 to 12 grand. Anyway, I went ahead and kept it all the way through the end of the lease because I knew that I had a guaranteed future value and I knew I was not going to buy it for $22,000. So leasing sometimes can act as an insurance policy against a vehicle that might decline really, really fast when the bank didn't necessarily predict it, or something like an accident happens, like what happened to me. Let me show you how that gets financed. It's a lot different. So you would take that 60 grand and you would break it up. Over here you'd have your principal, which is going to be the 30 grand, and then over here you're going to have the residual, or the guaranteed future value of 30 grand. So let's say at the end of the 3 years, you've kept the vehicle in great condition, you've changed the tires, kept the maintenance up on it, done everything that you're gonna do in order to keep your vehicle in good condition. And so you go in and at the end of 3 years, the vehicle is worth 35 grand. Well, does it make sense then to buy it for only 30 grand? Because that's what you get to do. You have the first right of refusal to buy that vehicle for the 30 grand. You've already paid the 30, so it's your vehicle. Now you get to decide. Now here's the best part. What if that vehicle is only worth like 15 grand? Oh man, because like all of a sudden electric cars take off maybe? I don't know. So anyway, Tundra is now worth like 15, but you owe 30. Well, obviously at that point you can go and you can give that car back to the bank and they'll take that $15,000 loss. Let them take the loss, right? They're the ones who are getting the interest rate or the risk. So anyway, that's kind of the way that, or I'm sorry, this is kind of the way that the lease works. But also let me show you exactly how the principal gets financed. Okay, so same idea. You're gonna have your box, you're gonna have one, you're gonna have your 36th payment. Down here is where you're gonna have your lease money factor. And then whatever that lease money factor is, like I said, you multiply it times 2,400. So if your lease money factor is 0.00245 times 2,400 equals the interest rate of 5.88%. Okay, this is your principal. So as you're making your payments, you're actually making even principal money factor payments. Well, anyway, so as you can see, leasing and purchasing can be very similar. They're just really different ways of financing a vehicle. You know, another way you could do it is you could just pay cash. I prefer the lease over cash, and if you want, you can even do a one-pay lease where you walk in and you pay for the lease all the way up front, and then at the end you still make your decision, trade it in, still have all of your options. So tons of different ways to finance a vehicle, folks. I hope this was helpful. If you enjoyed the content, please consider sharing, liking, and subscribing. All right, we'll see you next time, folks.